IBM now down more than 6.5% in overtime after the company reported earnings moments ago, coming in light on revenues. IBM also confirming it will buy software firm HashiCorp in a deal valued at $6.4 billion in cash, about 35 cents a share. Joining us now to discuss is Evercore ISI's Amit Daryanani. Amit, I want to ask you about a couple of comments from Arvind Krishna. I talked to him about this deal and about where HashiCorp is going to fit in. We talked about the multi-cloud and hybrid environment. Here's something he said. He said, the Terraform platform, that's from HashiCorp, is a great way to automate that complexity of dealing across multiple clouds and platforms, and to take away all of that complexity and go ahead and do that across. Of course, maybe one of the things we'll deploy across those environments is also Red Hat OpenShift, so they're nice and complementary that way. He said, I think the two combined with what we have in Red Hat is a great fit for the market, and with our geography scale, we'll be able to scale it all over with the complementarity to both Ansible and OpenShift. I think we'll get a lot more sort of combined sales plays. Do you believe it?
I mean, listen, the transaction makes sense to the extent you believe IBM wants to scale up in this hybrid multi-cloud story. So I think the deal is actually fairly logical for them to go after and do. The question, John, I think may just become at this point, and this is what investors are worried about, is, you know, IBM has been talking about Red Hat business growing double digits solidly for 24. While this deal does make strategic sense, the fear everyone has is, you know, are you doing this because you don't think Red Hat can grow organically, so you need to compound it in other ways, right? So I think that's one of the things that the company has to talk about, which is, can Red Hat keep growing irrespective of HashiCorp, or did they kind of need this to bolster the Red Hat and software growth going forward?
How much does that matter to how the stock is valued now if they're able to deliver on that roughly $12 billion free cash flow target, which, you know, he says that they are on target to deliver on? And if there are opportunities like this that are going to generate cash and be accretive within a couple years?
You know, listen, from IBM's perspective, they had a lot of success with Red Hat, right? If you step back and think about the larger deal that Arvind did when he took over as CEO. So they've had good success with this. I think doing deals like HashiCorp, where you can leverage and scale IBM's go-to-market sales organization, makes a tremendous amount of sense to amplify the growth rates in software, right? But the part I think investors want to get their arms around is it is truly a way to amplify or put in incremental growth versus offsetting declines somewhere else, right? So I think that's a bit of a worry everyone has. But to the extent this is amplifying growth, the $12 billion free cash flow number is intact based on their disclosures. You know, we think the stock will keep working higher, and certainly in, you know, high teens free cash flow valuation, the stock should be worth 210, 215 versus where it's trading at right now.
Free cash flow. The fact that they posted better than analysts expected, the fact that Arvind Krishna seems very confident that they're going to hit this forecast that they've laid out that was already so robust. Your thoughts?
Listen, I think the stock has gone up and down typically on free cash flow metrics. So the $1.9 billion was much better than the $600 million they did last year in Q1. And so certainly the path at this point would appear that there should be upside to $12 billion number versus not. So that part is, I think, doing well for them. The question just becomes, right, you've had a bit of a revenue miss. The consulting business did decelerate a fair bit, and you're doing a deal. So is there a lot of moving parts? And I think that's the part that investors are going to try to get their arms around, which is, you know, to some degree, are you doing this deal from a position of strength and offense or not? I think that's the part that everyone's going to focus on.
What's the read-through? The fact that consulting was light. I realized that Krishna told John that they still perform better than their peers, but it comes on the heels of that trimming to guidance by Accenture. Who else could be potentially impacted by the softening we're seeing in that particular market?
You've seen a host of these consulting companies. You mentioned Accenture, I think Infosys is the other one, but a lot of them have been talking about a bit of a downtick in the consulting market the last couple of quarters. The assumption I think everyone had, in fairness, was IBM is less discretionary, so perhaps less susceptible to these macro worries. But you're seeing the downtick, again, not as severe as Accenture or others are seeing, but you're certainly seeing it. I'd say the one positive part in the whole thing is their AI-centric business on their backlog in consulting is more than $1 billion right now. So that piece longer term is doing extremely well for them.
So there's a contrast here between what ServiceNow said about the impact of the macro and what IBM said. Bill McDermott saying it's actually fueling it because customers can use AI to make money off of services. IBM not seeing that in consulting. What do you make of it?
You know, again, we'll have to see what the details are on this. I suspect they're not seeing it in their business right now. But the backlog, the billion-dollar backlog on the AI side, which I believe has more than doubled sequentially, is perhaps a reflection of what you're saying, which is AI will get used as a source of productivity enhancement for companies, and IBM is very well positioned to benefit from it. I guess it's more, John, on their backlog numbers right now versus on the revenue numbers, though.